What if the words sold as is are actually a trap that will completely derail your mortgage? Most buyers think as is just means the seller refuses to fix a leaky faucet, an old carpet, or ugly paint. But your bank sees it completely differently. Today, I am revealing the three hidden hazards that can trigger a loan denial on an as is house. And most importantly, I'm giving you the three steps you must and should take to protect your earnest money before you ever sign an offer. I'm Cathy Sabater, mortgage strategist, and here is the biggest disconnect I see in real estate right now. When you buy a house, you are actually dealing with two completely separate agreements. First is the purchase contract. This is between you and the seller. But the mortgage is between you and the bank because the bank is putting up hundreds of thousands of dollars. They view that house as their collateral. They honestly do not care if you promised the seller you would take the house as is. If the property isn't safe, sound, secure, and insurable, the bank will simply refuse to fund a standard loan. So, how does the bank find out if the house is safe? Well, they send the appraiser. Most buyers think that the appraiser is just to check the price and make sure you aren't overpaying. Well, the appraiser's not just doing that. They are the bank's eyes and ears on the ground. They are actively looking to see if the house meets the lender's minimum property requirements, also known as MPRs. And if the house doesn't, the loan could potentially freeze. Here are the three hidden hazards that can stall an as is loan. Hazard number one, health and safety. This means broken windows, exposed electrical wiring, a missing water heat strap, or a broken HVAC system, heating, ventilation, air conditioning. I recently saw a buyer go into escrow on a beautiful remodeled as is house. The seller put in gorgeous vinyl floors and a brand new kitchen with new cabinets and tile granite tops. But they exposed the electrical wires hanging in the garage. And they forgot the mandatory earthquake straps on the water heater. To the buyer, that was a quick $50 weekend project. They didn't care. But what about the appraiser? Well, the appraiser sees that as an immediate safety hazard. They flag it into the report. The underwriter conditioned the file, and the entire deal paused over a $50 fix. This is the part most people miss. As is does not override the lender's safety requirements. The bank will not close until the hazard is cleared. Hazard number 2, the roof and the insurance trap. If the appraiser notes severe deterioration on the roof, the underwriter could demand a formal roof certification. If the roofer now determines it has less than 3 years of life left, the underwriter, the bank, may require it to be replaced before closing. But here's the massive hurdle. What about home insurance? I recently saw a deal where the underwriter actually approved an older roof. The buyer and us, we thought we were in the clear. But days before closing, guess what the homeowner's insurance company did? They did a thrown flyover. They saw some curling shingles on the roof and they flat out denied the policy. Here's the harsh reality. If you cannot get homeowners insurance, the bank will not fund your loan, no matter what the underwriter says. An as-is seller is not going to buy you a new roof, which means you are suddenly trapped, scrambling for expensive, high-risk insurance just to save your escrow. Hazard number 3, the VA and the FHA traps. If you are using a government loan, the rules are incredibly strict. Take peeling paint. If your home was built before 1978, FHA and VA view peeling paint as a lead-based hazard. It must be scraped and painted before closing, period. Then you have termites. For a VA loan, a clear Section 1 termite report is mandatory in many areas. For an FHA loan, it isn't automatically required unless the appraiser flags it or someone writes it into the contract to protect their buyer. That one sentence changed the whole loan file. It forced the underwriter to review the report, and this particular termite repairs came out to approximately $4,000 in termite damage. The seller refused to fix it. The underwriter refused to fund it. And now the deal is stalled. When any of these 3 scenarios happens, you hit a brick wall. The underwriter halts the loan and demands repairs. Your realtor goes to the seller, but the seller points to the contract. What does it say? Absolutely not. I sold this as is. Suddenly, you are backed into a corner with 3 tough choices. Choice number 1. You try to pay out of pocket to fix a house you don't even own yet. Many lenders strictly prohibit this. Choice number 2. You just walk away. The loan gets denied and you lose the money you spent on appraisals, inspections, and you start your search all over again. Choice number 3, you scramble to switch to a renovation loan. Now, this takes more time and changes your mortgage map and requires a frustrated seller to agree to an extension. So, how do you buy an as-is property safely? Well, you need to follow these 3 steps. Step number 1, never waive your inspection. Do not waive your inspection contingency blindly, because as is just means the seller won't fix it. It means you are still allowed to inspect it and make sure it's going to meet the MPRs for the bank. Step number 2, ask for the seller's disclosures early. Review them before you write the offer so you know exactly what is broken before paying for an appraisal. Step number 3, have a strategist on your team. Work with a professional who understands and reviews the property up front and knows if it will pass VA, FHA, or conventional guidelines. This is where strategy matters before the offer, not after the problem shows up. If you are looking at an as-is property this weekend, do not guess on the guidelines. Click the link in my description to book a strategy call. We will review the property and run the numbers and build a strategy based on protecting your earnest money. Make sure you hit subscribe, because in my next video, I will be showing you how to turn your current VA home into a cash flowing rental property so you can buy your next home with 0 down. I will see you there.